We're glad to have you back. According to the presidency, Nigeria's non-oil revenue is rising at an unprecedented rate, driven by reforms aimed at compliance, fiscal stability, and digital tax administration. Presidential spokesperson Mr. Bayo Ononuga disclosed this in a statement in Abuja, where he said the increase is a direct result of reforms to improve the government's fiscal position, strengthen compliance, and digital tax administration. The president highlights the significant growth in non-oil revenue occurring to the Federation, federal, states, and local governments, stating that from January to August 2025, total collections reached 20.59 trillion naira, a 40.5% increase from 14.6 trillion naira recorded in 2024. He said the performance aligns with projections and keeps government on track to achieve its annual non-oil revenue target. The presidential spokesperson added that the federal government has decreased borrowing from local banks, ceased borrowing in totality from local banks since early 2025, underscoring improved fiscal discipline, while non-oil tax revenues are rising. Oil-based revenues remain under pressure due to declining crude oil prices. Well, I have with me an economist and research professor, Dr. Andrew Nevin, who joins me for this conversation. Dr. Nevin, good afternoon, and thank you so much for being on the show.
Oh, it's always great to be with you. Good afternoon.
Yeah, I think first we should start with this increase from non-oil revenue. We've had this discussion before now, saying we need to get to a point where the dependence on oil revenue reduces to a point where we focus more on non-oil revenue. And now we're seeing that 20.5 trillion naira is what government has realized from the non-oil space. How does this come to you? How does this help our budgetary allocation?
Well, I think it's fantastic news. Let me just start out by saying, of course, the chief architect of all this is Taiwo Oyedele, who was my colleague at PwC. Those who know him know he's absolutely brilliant. He studied these issues for decades. He came out with a great program for Nigeria, but also credit to the administration, His Excellency President Tinubu, and all the people involved for allowing this to pass and be implemented. I mean, there are lots of good ideas around the world in different countries that never get implemented for political reasons. So the fact there was the political will to do this was fantastic and a real credit to all of Nigeria. And now we're seeing the results. I mean, I'm not surprised that we're seeing these great results and this 40% increase, and I think it'll just continue. And having a better tax system is just one of the keys to having a better economy. So congratulations and kudos to everyone.
Indeed. So that's a step in the right direction. We expect the proper implementation of the tax laws from January 2026. What do you also expect as we move towards that time? It's just a few months to come.
Well, I mean, I've talked before about some critical things in the country to move forward. One, of course, is the central bank, and the central bank has done a great job over the last couple of years. I mean, we've had a stability in the exchange rate. People understand how it works, how you are able to import or export items, and how the foreign exchange works. What we haven't seen yet is a big enough decrease in interest rates. So interest rates, capital market interest rates are starting to ease, which is a good sign. I think what we need to see is an actual improvement in the exchange rate, so a reduction in the dollar rate from 1,500 or so, or mid-1500s, a little bit lower to take some pressure off inflation. Inflation has peaked and is coming down, but not quite fast enough. So hopefully we'll see that in the new year. I think we'll also continue to see growth in the service sector, and particularly the export of services. So the Vice President, His Excellency, the Vice President's policy around outsourcing services to Nigeria, particularly around the country. I think the first implementation of that strategy was in Gombe, which I thought was a fantastic thing to just, we always said when I was in Nigeria that we wanted to create employment and opportunities for young people in Nigeria, no matter where they live, so they could be in Gombe and serve a global corporation. So I think that is a good sign. I think one thing that's a little bit worrying is the oil and gas sector. So I think there's been real improvements in the way the sector has functioned with the coming on stream of the Dangote refinery and also some of the modular refineries, which has helped a lot and reduced some of the cost of importing refined product and shown that we can make it in Nigeria. But I'm a little bit concerned that we've stalled out in the increase in oil production. So I think it was still around, hasn't quite hit 1.6 yet, 1.6 million barrels a day of oil and gas equivalent. I mean, if we go back in history, I think it bottomed out about 1.1 million, which has put enormous pressure on the whole economy and the exchange rate back in 2022. This administration has brought it back to 1.5, but it needs to go further on that. So I was a bit concerned about that stalling out. But overall, I think the direction of travel is positive, and I think this shows in the numbers. I mean, we're up in the growth rates, certainly mid 3% in 2025, and I think it'll continue and hopefully hit 4% in 2026.
That growth trajectory is very important, and you've talked about this for some time, that we cannot be growing at that rate and expect inclusive growth. So we're talking about 4%, where many even say at a point, they say 2030, we should be moving to 6-7%. But my question to you really would be inflation drivers. You talked about inflation not coming down as expected, and we are even more worried because the month-on-month inflation is on the high side, a little bit on the high side. But what are those drivers, particularly food? Do you see any quick wins for government way out of this to, one way or the other, get it sorted?
Well, there are no quick wins. And of course, I've talked about agriculture for a long time, but let me talk about oil for a moment. I mean, one of the things that would really help the inflation numbers is if we got the oil production up, because it would allow the exchange rate to allow the naira to appreciate, which means that the number of naira per dollar goes down. If it got down to 1,300, 1,200, 1,100, that would really help. So that's why I really emphasize this oil production on that, and it worries me that we've stalled out on that at about mid 1.5 million barrels a day. In terms of agriculture, I mean, I think there's two fantastic things about agriculture in Nigeria. One is the country is so fertile. So the last 2 years I lived in Nigeria, I had the privilege of living in Abuja, moved from Lagos to Abuja. And it's just the quality and quantity of produce that's grown in the Abuja region is incredible. I mean, as people know in the country on that. And it's so fertile. So there's always going to be an opportunity in agriculture. The other thing that's very positive about agriculture is because so many prominent Nigerians, wealthy Nigerians, are still connected to their home state, their home village. People who are in one industry often want to do something as well in agriculture. So there's always these new ideas. Even if people fail or there's a problem with their project, they'll do something again or someone else will come in. So that is very positive for agriculture. The negative continues to be the security situation. I mean, to the extent that improves, we're going to see an improvement in food production. But the starting point, as I said, is rather than focus so much on food, I think that the inflation in food is derivative of other things. If we focused on getting oil production up, which would reduce the inflation and the input cost for agriculture, and we focus on the security situation, then prices in agriculture will naturally stabilize or even come down.
You've talked about the Central Bank of Nigeria doing pretty well. We've seen the stability, the disparity between the other market and, of course, official market. Fair, better than what it used to be. There's been a bit of stability. Okay, let's take this break. When we come back, I would be asking you that question. We'll be right back. We have a commercial break. All right, thank you so much for staying with us. Dr. Andrew Nevin is my guest, economist and research professor, speaking around Nigeria's economy development in recent times. Now, I was asking you before we went on that break that you've commended the Central Bank of Nigeria trying to address that disparity between the market, that's the official market exchange rate, and the parallel market. But let's talk about the NNPCL, which you've also talked about in recent times. We've always had this conversation. What do you make of this new administration at the NNPCL? Talking about attracting investments, talking about issues around production and all of that. Do you think that is different from what we used to have before now?
This administration reconstituted a new board. I think the board has a level of professionalism that is really what Nigeria needs. So I have a lot of confidence in the NNPC going forward. As I said earlier before the break, I'm a little bit concerned that the trajectory of the increases in oil production have stalled. But overall, I'm confident in the NNPC. I do think, let me relate it to one other institution that is really critical for Nigeria, which is the MAFI. So this is the Minister of Finance Investment Group. So this takes one of the papers that I wrote, or we wrote when I was at PwC Nigeria, was about Nigeria was a rich country but had so many dead assets, so assets that were not producing a return. So MAFI is designed to, has all of those assets in it, and then to maximize the value, figure out a way to maximize the value for Nigerians, including the NNPC. So I think a next step for the NNPC, which has been discussed for years, but I think is time, is some kind of either partial, well, certainly a partial privatization, whether it's a minority or a majority. But I do think that the government should float at least 20, 30, or 40% of NNPC. One, to give Nigerians an opportunity to invest in it, so we have so many assets in the pension assets in Nigeria, for example. So wage earners, average people can invest in NNPC. But secondly, to help up the game in terms of transparency and the management of NNPC to kind of get that oil production up. But let me finally say one other thing that I think is really critical for this. I view the oil or hydrocarbon increase that Nigeria should pursue as something that's only going to be valuable for 5 or 10 years. I mean, it is inevitable that with the investment in renewables that's going on around the world, not for policy reasons, but for economic reasons. So if you look at wind and solar in China and India, for example, it's just exploding. So we are going to pivot away from hydrocarbons. So Nigeria needs to make sure in the window that we still have for it, we get the maximum value for it, but also be prepared for a world where the oil price is not going to be $70, it's not going to be $60, it's going to be $40, $30, and eventually we won't be able to sell the oil.
Indeed, energy transition everywhere. People are moving, and so obviously we should expect that should happen. But many would also argue, analysts like you would argue, that Nigeria needs oil to also transition away from oil. What about that?
Well, that's what I said. But let's only have a 5 or 10 year plan for being dependent on oil, because I think in 2035. If we still think we can be dependent on oil, we're going to be in a very difficult spot. So yes, let's benefit from the hydrocarbons we have, particularly gas. I know there's a lot of emphasis on gas. That's something I've talked about for a long time, and of course related to the war in Ukraine and Europe's needs, and globally gas demand. But let's be mindful of the fact that, in 2035, I just don't see oil or gas being used more. We're going to reach peak oil. People know that President Trump has already criticized the IEA, International Energy Association, for predicting peak oil in the next few years. On that, peak oil is coming. Whether it comes in 2027 or 2031 or 2035, it's coming in my lifetime, and we need to, as I said, profit in the short and medium term from our hydrocarbon assets, but also be prepared for the fact that they're not going to last for much longer.
All right, now back to reviving the economy, which many say is already stabilizing. Is trying to, address the issue of the micros, and that's where issue of support, credit comes in. And President Tinubu has talked about a credit society where people could get credit to, buy things, run businesses, and all of that. And that's why we have the Credit Corps, the Nigerian Credit Guarantee Scheme, and all of that. But I want to ask you what you make of all of these schemes. How can it be properly run so that the benefits could be harnessed?
I'm not keen on the government getting too involved in providing credit for all the reasons that people understand. I think that with the modern technology and the data we have, there's the ability for private sector actors to take that data and offer credit to people. And, M-Pesa has showed this. They're not just a money transfer scheme in Kenya. They're also a credit scheme. So we don't necessarily need to have the government involved. I think one area where the government's been involved in credit, where they're making a big difference, is in mortgages. So we now have a rapidly growing kind of mortgage pool, and I think the role of the government, the federal government, in that has been quite helpful. But for microcredit, so for a small business that needs some credit, I think the private sector can figure it out. And I know lots of the banks. Of course, when I was with PwC, my client group were the financial services companies, so I know the banks, and they're all working on it. And then, of course, you have people that are non-bank actors that also want to provide credit. So I think that sector is something that I would be nervous about the federal government trying to design a scheme to deliver microcredit at subsidized interest rates to millions of small business people, men and women. I think that that runs, particularly if it has subsidized interest rates, because it runs the risk of again, kind of being corrupted or degraded because of the perverse incentives on that. The solution to interest rates is to bring inflation down. And if we get a better exchange rate, can bring inflation down, interest rates will naturally follow.
We know that Donald Trump has been back and forth with the Federal Reserve's chair and, of course, even the governor of the Federal Reserve about interest rates and all of that. And we know what's also happening here, that Governor Cardoso is holding strong to rates, saying, yes, we still have to tighten monetary rates until inflation eases to a point where we are so sure of where we're headed. So what do you make of our inflation, our stance on monetary policy, I beg your pardon, here? Compared to also what we see in the global space, considering global issues now?
Yeah, no, I understand. Well, I'm not going to second guess Governor Cardoso. I think he and his team have done, a fantastic job on this. And they're, really, there's very good data in Nigeria compared to many countries around the world. And he knows exactly, his team knows exactly what they should be doing. I mean, they need to see inflation come down if you want to have a significant decrease in rates. I mean, as I said, rates have peaked and they've come down a little bit. The capital markets are certainly seeing a decline across the yield curve. So, we need more of the same. But I go back to what I said before. This is why the 1.5 million barrels a day is a real product. Stalling out at that. If that number was 1.7, 1.8, 1.9, it would really bring a lot less pressure on the exchange rate, and we could see that appreciation that would bring down inflation. So we need to create that kind of virtuous circle. I mean, the other big export earner, which I've always talked about, is the export of services, and that's happening. But that's like a slow build. It can't replace in the next kind of 1 to 5 years an increase in the oil production that could really bring in a lot of dollars and bring down inflation.
So back to the agricultural sector, which many still agree that is the mainstay of Nigeria's economy. You talked about that in your first submission. We used to have the Anchor Borrower Scheme, series of schemes by the Apex Bank to support agriculture at a particular time. Do you think that we still need to go that route this time?
No, so I think Governor Sanusi did a very good thing when he brought in these programs back, more than a decade, more than 15 years ago now. Because at that time, no one really realized the potential for investment in agriculture. So it was the biggest part of our GDP, the biggest part of employment, but people were not investing in it. So he introduced that program. I think really raised awareness of the potential of agriculture. But now I think we all understand the potential of agriculture, and the private sector is very interested. And they're going to be the ones that drive the schemes that make it work. So, for example, something like shared tractor, shared mechanization. I mean, not every farmer, if you have a small holding, obviously can afford mechanization and their own tractor, his or her own tractor. So those need to be shared. But private sectors are creating these businesses. And also, what's going to drive agricultural development is the development of the supply chains. I mean, the coal supply chain, for example, for something like tomatoes. Again, the private sector, they're really well aware of it, and there's more and more funds available. People are willing to take risks, as I said. So I don't think we need to have any more of these schemes. And the Anchor Borrower Scheme, when we kind of did the retrospective on it, didn't really like many of those subsidized interest schemes deliver on its promise, and COVID had a big impact on the ability of farmers to repay. So I don't think we should go back to those schemes. And Governor Cardoso has been very clear. He said, look, they served us in the past for reasons that I was discussing earlier, but we don't need those schemes to continue. And the central bank is kind of laser focused on what it's good at.
All right, well, I think it's a good way to live it. But before I let you go, what are your projections basically concerning the economy moving forward?
Well, when I was at PwC, I never made projections, but let me make a projection. I think 2026, we will see in excess of 4% growth. I think that if I remember the last number of the IMF, they were about 3.8. But I think with the positive reforms I've discussed, particularly around what the central bank is doing, what MAFI is doing, what the tax regime, the movement of the tax regime, the new things that Taiwo helped bring in for 2026, I think we'll see. I'm going to go out on a limb and say I think we'll see the mid-4s. I think we'll see some real momentum building from what the country has done. So all credit. I continue to have great faith in Nigeria. In the medium term, it's going to be fantastic.
I trust you're always optimistic about Nigeria. Dr. Andrew Nevin, economics research professor, thank you so very much for your time. Do enjoy the rest of your day. Well, let's take another break. And when we come back, if you get up, we'll be here. We'll be talking markets. Don't go away.